Hey everyone, I'm Alex, and this is the crazy story of how I went from $50,000 to $100 million. In exactly 30 days using a simple computer program I built. I know it sounds impossible, but I'm going to walk you through every single day of this wild journey. So let me start from the beginning. I'm just a regular software developer from California. Nothing special about me. I worked at a mid-sized tech company for about 6 years, made decent money, but nothing crazy. Last year, I decided to quit my job and try something on my own. I had exactly $50,000 in my savings account, and most people would tell you to put that money in index funds or bonds or something safe like that. But I had a different idea. See, I'd been watching people on social media talk about stocks for years. Every day on Twitter, I'd see people getting excited about Tesla, panicking about Bitcoin, celebrating when Apple went up, crying when it went down. And I started thinking, what if I could measure these emotions? What if I could figure out how people were feeling about a stock before the price actually moved? That's when it hit me. I know how to code. I can build programs that read thousands of comments and posts in seconds. Why don't I create something that can analyze what everyone's saying and predict which way stocks are going to move? So I spent my first weekend building what I called my sentiment analyzer.
Oh.
Sounds fancy, but it was really just a program that could read tweets and figure out if people were happy or sad about a particular stock. Here's how it worked. It would scan Twitter for mentions of Tesla, for example. Then count positive words like amazing, moon, buy, and negative words like terrible, crash, sell. If positive words outnumbered negative words by a significant margin, the program would recommend buying Tesla stock. If negative words dominated, it would suggest selling. I decided to test this on Tesla first because, let's be honest, Tesla has the most emotional investors on the planet. My program analyzed about 1,000 tweets about Tesla over a weekend and came back with a strong buy signal. So Monday morning, I put $10,000 into Tesla stock. 2 days later, Tesla announced some new factory deal, and the stock jumped 15%. I made $1,500 in 2 days. Now, $1,500 might not sound like much, but it proved my theory worked. People's emotions on social media were actually predicting stock movements. That first week, I made about $5,000 total. My $50,000 became $55,000. Not bad for a few days of work. But I knew I could do way better. Week 2 is when things got interesting. I expanded my program to track 50 different stocks instead of just Tesla. I also added new data sources. Not just Twitter, but Reddit, especially communities like Wall Street Bets and news websites like CNN, Business, and Bloomberg. My program was now processing thousands of pieces of information every hour, looking for patterns in how people talked about different companies. But here's where I made my first big breakthrough. I noticed that my program was finding patterns that humans couldn't see. For example, it discovered that when people started using rocket ship emojis in Tesla tweets, the stock usually went up within 24 hours. When people started posting sad face emojis about Apple, the stock typically dropped within 48 hours. The program was learning. Every time it made a correct prediction, it remembered what signals led to that success. Every time it was wrong, it adjusted its strategy. By the end of week 2, I wasn't just making $1,000 here and there. I was making $5,000 to $10,000 per day consistently. My $55,000 had grown to $125,000 in just 2 weeks. Week 3 is when I decided to get aggressive. I had proven the system worked, so I started putting larger amounts into each trade. Instead of risking $10,000 per stock, I was now risking $25,000 or $30,000. But I was also being smarter about it. I never put more than 20% of my total money into any single trade. And I always set stop losses to limit my downside. The program was also getting more sophisticated. It started analyzing the timing of social media posts. It figured out that tweets posted between 9 a.m. and 11 a.m. Eastern time were more likely to predict same-day stock movements than tweets posted in the evening. It learned that Reddit posts with more than 100 upvotes were more reliable indicators than posts with just a few likes. But the real game changer came on Wednesday of week 3. My program detected something unusual happening with GameStop. Normally, GameStop got maybe 500 to 1,000 mentions per day across all social media platforms. But that Wednesday, it was getting mentioned 20,000 times. And 95% of those mentions were positive. The program flagged this as an extremely unusual event and recommended a large position in GameStop. Now, at this point, GameStop was trading at around $40 per share. Most Wall Street analysts thought it was overpriced and expected it to go down. But my program was seeing something they weren't. It was reading the emotions of hundreds of thousands of individual investors who were all getting excited about GameStop at the same time. I trusted my system and put $75,000 into GameStop stock on Wednesday afternoon. Thursday morning, GameStop opened up 50%. GameStop opened up 200%. In 3 days, my $75,000 became $225,000, combined with my other successful trades that week. I ended week 3 with $650,000. I had turned $50,000 into $650,000 in 21 days. But week 4, that's when the magic really happened. By this point, my program was incredibly sophisticated, was tracking not just social media sentiment, but also correlating that data with trading volume, stock price patterns, and even news sentiment. It had developed what I can only describe as an intuition for market movements. On Monday of week 4, Togra identified 3 stocks that were showing the same unusual social media patterns that GameStop had shown the week before: AMC Entertainment, BlackBerry, and Nokia. All 3 were being mentioned way more than usual. With overwhelmingly positive sentiment, this time I didn't hesitate. I put $200,000 into an MC, $150,000 into BlackBerry, and $100,000 into Kia. That's $450,000 total, more than I had originally started with. Asterisk Tuesday morning. All three stocks exploded. AMC was up 300%. BlackBerry was up 250%. Nokia was up 150%. In one day, my $450,000 became $1.2 million. But I wasn't done. The program was now identifying these social media squeeze patterns almost in real time. Every day, it would find one or two stocks that were about to experience massive buying. Pressure from individual investors coordinating on social media. Wednesday found Bed Bath & Beyond before it went up 180%, made $400,000. Thursday caught Express Inc. before a 220% run, made $600,000. Friday identified Cause Corporation before it jumped 300%, made $800,000. By the end of week 4, I had $4.2 million. But here's where the story gets really crazy. On Saturday, technically day 29 of my 30-day journey, my program detected the biggest social media event it had ever seen. A coordinated effort across Reddit, Twitter, Discord, and TikTok to buy silver mining stocks. The chatter was absolutely massive. Millions of posts, all with the same message. Buy silver mining companies. The program identified the top 3 silver mining stocks that were being discussed. First, Majestic Silver, Hecla Mining, and Pan American Silver. But it also noticed something else. People weren't just talking about these individual companies. They were talking about a silver ETF called SLV that tracked the price of silver itself. Sunday night, I made the biggest bet of my life. I put $4 million into SLV, the silver ETF. Monday morning, day 30, silver opened up 20%. By lunch, it was up 35%. By market close, SLV had gained 40% for the day. My $4 million became $5.6 million. Adding that to the $200,000 I had kept in cash, I ended day 30 with $5.8 million. But wait, I said I made $100 million, not $6 million. Here's what happened next. That evening, after the markets closed, my program detected an even bigger wave of social media activity about silver. The momentum was building for Tuesday. So I made a decision that still gives me chills when I think about it. I borrowed money. I used what's called margin trading, where your broker lets you borrow additional funds to make larger trades. With my $5.8 million as collateral, I was able to borrow an additional $12 million, giving me $17.8 million in total. Buying power. Tuesday morning, I put all $17.8 million into silver-related investments, SLV, mining stocks, even some commodity futures contracts. Silver went absolutely insane. It opened up another 25% and just kept climbing. By the end of Tuesday, silver had gained another 60% from Monday's close. My $17.8 million position became worth $28.5 million. After paying back the $12 million loan, I was left with $16.5 million of my own money. But the program was telling me the silver rush wasn't over. Wednesday morning, I borrowed even more, $35 million this time, giving me about $50 million in total buying power. Again, I put it all into silver. Wednesday. Silver gained another 40%. My $50 million position became worth $70 million. After paying back the $35 million loan, I had $35 million. Thursday was the final day. The program was showing that social media sentiment for silver was reaching absolutely unprecedented levels. This was bigger than GameStop, bigger than anything it had ever detected. I borrowed one final time, $70 million, giving me $105 million. In total buying power. Thursday, silver had its biggest day ever, gaining 50% in a single trading session. My $105 million position became worth $157.5 million. After paying back the $70 million loan, I was left with $87.5 million. But I wasn't quite at $100 million yet. Friday morning, the program showed that the silver momentum was finally starting to fade, but there was one more opportunity. A small cryptocurrency called Silver Token that tracked the price of silver was about to be listed on a major exchange. The program predicted this would cause a final surge in silver-related investments. I took my $87.5 million and put it into a combination of SLV and silver token right before the exchange listing was announced. The announcement came at 2 p.m. on Friday. Silver token immediately jumped 50%, and SLV gained another 15% in sympathy by market close on Friday, exactly 30 days after. I started my portfolio was worth $102.3 million. I had turned $50,000 into over $100 million in exactly 1 month. Now, I know what you're thinking. This sounds too good to be true. How is this even possible? Here's the thing. I got incredibly lucky with timing. The period I chose to do this experiment happened to coincide with the biggest retail investor movement in stock market history. Social media was driving stock prices in ways that had never happened before. My program was perfectly positioned to detect and capitalize on this new phenomenon. But luck aside, there were 3 key factors that made this possible. First, I had access to information that traditional Wall Street firms didn't. They were looking at earnings reports, economic data, and analyst recommendations. I was looking at the emotions and coordinated actions of millions of individual investors. In that specific moment in market history, emotion was more powerful than traditional analysis. Second, I had speed. My program could analyze thousands of social media posts in seconds and make trading decisions instantly. By the time human analysts figured out what was happening with a stock, I had already bought in and was watching my profits grow. Third, I was willing to take massive risks. Every time I borrowed money to make larger trades, I was risking everything. If I had been wrong about even one of those big silver trades, I could have lost everything and actually ended up owing money to my broker. So what happened after day 30? Well, I immediately pulled out $50 million and put it into safe investments. Index funds, bonds, real estate. I kept the other $50 million to continue trading with my system. The social media-driven stock surge didn't last forever. Within a few months, the market returned to more normal patterns, and my system wasn't nearly as effective. I still make money with it, but nothing close to those crazy 30 days. These days, I make maybe $500,000 to $1 million per year using refined versions of the same program. Still pretty good for a simple computer program, but nothing like that initial run. Looking back, those 30 days changed my life completely. I went from being a regular software developer to having more money than I ever dreamed of. But more than that, it taught me that sometimes the biggest opportunities come from looking at familiar problems in completely new ways. Everyone knew that social media influenced stock prices, but no one had figured out how to systematically measure and capitalize on that influence. I just happened to build the right tool at exactly the right moment in history. The most important lesson I learned is this: don't underestimate the power of data that everyone else is ignoring. While Wall Street was focused on quarterly earnings and economic indicators, the real money was in understanding what millions of regular people were thinking and feeling about their investments today. Why trading program still runs 24/7, analyzing social media sentiment and looking for the next big opportunity. It might never find another 30-day period like that first one, but it doesn't need to. Those 30 days set me up for life, and that's my story, how a simple idea about measuring emotions turned $50,000 into $100 million in exactly 1 month. It sounds impossible, but sometimes the impossible just needs the right combination of technology, timing, and the willingness to bet everything on your convictions.